Hey everyone, this video is being recorded on the evening of Wednesday, February 21st, 2024. Thank you so much for tuning in. In this video, I'm going to talk about why gold's secular bull market has not yet started. And, I like to use gold against the stock market as one of the arguments for this, but I think gold against the 60-40 portfolio is even better because that incorporates another asset class. So here we have gold, and then in these calculations, we have gold against a 60-40 portfolio, and then we have the gold stocks, the Barron's Gold Mining Index, against a 60-40 portfolio. So this 60-40 portfolio, it's a data series that I compiled with some help and calculated with some help going back almost 100 years. And so the 60-40 portfolio is important because it's two major asset classes. It's the conventional investment portfolio. And gold is anti the conventional investment portfolio. So it's 60% stocks, 40% bonds. So you have the main asset classes. You have stocks, bonds, commodities. Those are the main three. Gold, of course, fits into commodities, although it's really money. So it's different. But I mean, it's the granddaddy commodity, as a lot of people say. Gold and oil and maybe copper after that. So that's why gold against the 60-40 portfolio is so beautiful, because it's incorporating really the two competing asset classes. So we can see here, 70s, 2000s, secular bulls in gold, and very strong moves in real terms, very strong outperformance against the 60-40 portfolio. Now, as we know, gold has this beautiful cup and handle. This handle is kind of dragging on. Gold has been unable to break above 2100. I mean, it's been grinding its way higher, but again, unable to break above 2100. So my contention is you're not going to see a real bull market until the stock market rolls over and all that capital starts to move back into gold. Now, the bond market has cracked. So I think that is helping gold. That's helped gold significantly. I think that's a big reason, that and probably central bank buying, or why gold is up here near 2100 and not at 1850. But I mean, I'm getting away from the point of the video, which is really, why is gold not in a secular bull market? But based on this 60-40 calculation, or this ratio, I should say, gold against the 60-40, this moving average is the 80-month, and we can see this period, August 2018 to August 2020, gold, that was a real bull market. Gold had like an 80% move. It outperformed the 60-40. Now, even recently, it's been outperforming the 60-40. But the problem, both times, it has been unable to break above this moving average and begin a real bull market. Look at what happened back here. I know this is kind of artificial because we were on the gold standard until 71, so the gold price was fixed. But gold tested the moving average a couple times, and then it surged above it. Now, obviously, that's because we ended the gold standard. We let gold go, and boom, massive bull market. So this was a little artificial. But nevertheless, I think nevertheless, I should say, my point is not until gold convincingly breaks above this moving average, it's not in the bull market yet. But this is a good comp for the mid to late 60s, as is gold against this, or gold stocks against the 60-40, because this action here in the mid to late 60s very similar to this action. Even before it, you have a bottom here and a bottom here, so kind of a double bottom. This is kind of a double bottom, and then you have this move here, although not as strong. I mean, it's petering out. This was much stronger. I think the reason why this is much stronger is because back then, gold stocks were one of the few asset classes you could buy. I mean, if you wanted to kind of make an anti-market or anti-bonds investment, gold stocks were really the only thing. You couldn't buy emerging markets. You couldn't buy TIPS, Treasury Inflation Protected Securities. You couldn't invest in foreign currencies. So I think, therefore, that's a big reason why gold stocks were so much stronger at that point. But even with that being said, there is a strong similarity to where we are. Now, I'm going to get into some other charts that show the real potential that gold has in a secular bull market. And this is even more evidence as to why the secular bull market really hasn't started yet. So what this chart shows is this is based on the gold that we have in the United States, all of our holdings. At what gold price would it back 40% of the monetary base and then 100%? So these two lines are 40%, which I think back when we were on the gold standard, that was legally what the backing had to be. So 40% and then 100%. And note, in the Great Depression era, the gold price was at a level where it backed 100%. In the middle of the 70s bull market, it went above 40%. Now at the end, it went even above 100%. So eventually, when we get into a secular bull, and that this thing is going to last into the 2030s, maybe deep into the 2030s, in my opinion, you're going to see the gold price go much, much higher. And if you tell me we're going to have a 10, 12-year bull market and that it hasn't started yet, gold is probably going to get to one of these points. I mean, it's definitely going to get to the 40% point, but it could also get to the 100% point again. I mean, it's going to be a little scary, but I mean, that's a topic for a whole nother video. If you want to watch that scary stuff, there's plenty of other YouTube channels out there that push that doom porn content. Let's look at gold against the S&P 500. So historically, every 30 or 40 years, so more than every generation, you see a move to above 4 to 5. I mean, at a minimum, we're looking here, it gets to 4. So the S&P right now, it's at 5,000. So 4x, that's 2,000. I mean, 5 would be 25,000. Let's just say 10 or 12 years, the S&P is at 4,000. Let's say it's even down. So 4,000 times 4 or 5, that's 16,000 to 20,000 gold. So we're looking at these figures. Gold is, based on those figures, gold is nearly 10x. I mean, it's 10x at the high point where it is now. So finally, just taking a look at gold and its price action, this highlights the most significant breakouts in gold's history. And when it makes a multi-year breakout, I mean, look at how big of a move it can have. I mean, this one in 2005, from here up to the 2011 peak, I mean, this was a move of 4.5x over 6 years. So let's say that gold broke out sometime this year. That would put gold at $10,000 by 2030, the end of the decade. Not a prediction, but I'm just pointing out the potential of the breakout. And I mean, this is a 13-year base. It's a little extended above this high, but this is basically a 13-year base. And when gold breaks out and when gold outperforms the stock market rolls over and all that, you're going to see, I mean, this isn't just going to double or triple. This is going to be a massive move. And that's what you're going to get in a real secular bull market. I mean, not just a little double or triple. It's going to do way more than that eventually when it's moving. But here we are, and it hasn't started yet, unfortunately. And I'm getting sick and tired of saying that in every video. We're not there yet. It's like in Dumb and Dumber when Harry says, I'm getting sick and tired. I mean, I'm not at that point yet, but you catch my drift. But anyway, the secular bull market hasn't started yet, but you're going to know when it starts because gold is really going to fly out of the gate when it starts. Thank you so much for tuning in. Leave a comment. Let me know what you think. Talk to you guys again in the next video.